Overview of the Estonian tax system. Paying taxes is a social contract which ensures the functioning of the state. We pay taxes for the collective good and to realize common interests. These include, for example, road infrastructure, hospitals, schools, police, and so on. For the provision of public goods and development of the state, it is essential that we all contribute. A number of state taxes are in place in Estonia. Upon payment of these taxes, some services are made more affordable or provided free of charge to us as citizens. The four main state taxes are income tax, 20%, social tax, 33%, value-added tax, VAT, 20%, and excise duties. Please note that the income tax and the social tax are paid on income, while VAT and excise duties are paid on consumed goods and services. Who is considered a tax resident in Estonia and who is considered a non-resident? With regard to tax liability, it is important to distinguish between residents and non-residents, as the extent to which a person's income is taxed depends on whether the income is received from Estonia or from other countries. A resident is a natural person who stays in Estonia for at least 183 days over the course of 12 consecutive calendar months and who pays income tax on income received both in Estonia and in a foreign country. A non-resident is a person who is not an Estonian resident. That is, an employee from outside the EU who stays in Estonia for less than 183 days over the course of 12 consecutive calendar months. A non-resident only pays income tax on the income received in Estonia. Residency plays an important role in the declaration of income. If a person is employed in one country but is a tax resident in another country, taxes must be declared in both countries. In order to avoid double taxation with regard to a non-resident, countries sign conventions on the avoidance of double taxation. More information on double taxation can be found on the website of the Estonian Tax and Customs Board. If a non-resident employee is on a short-term business trip in Estonia and their employer is a foreign company, their income is subject to tax exemption. What changes when a non-resident is granted Estonian residency? For an employer, granting Estonian residency means that in addition to the income tax, the employer is also required to pay the social tax, the unemployment insurance premium, and contributions to the mandatory funded pension if the recipient has joined the funded pension system. A resident of Estonia obtains the right to make deductions from the income subject to the income tax earned in Estonia. This means that in the income tax calculation, a basic exemption of 500 euros per month will be applied to the income. Non-residents who are residents in other European Economic Area member states also have the possibility to make deductions from the income taxable in Estonia by submitting a valid certificate of residency issued by the tax authority of the country of residence to the Estonian Tax and Customs Board. The certificate of residency is valid for 12 months. If you decide to leave Estonia, you must notify the Estonian Tax and Customs Board about the change of residency. Remember, only one employer can apply basic exemption on the basis of a person's application. On matters related to residency and taxes, visit the website of the Estonian Tax and Customs Board, www.emta.ee. If you have any questions, please contact the customer support team of the Estonian Tax and Customs Board, non-resident at emta.ee.